The Money Honey here. Welcome back to my channel. And in today's video, I want to discuss a hot topic of conversation, day trading versus swing trading, and what would be easiest for you to learn as a new trader getting started on this adventure. I'm going to give you my hot take on both sides of those coins, no pun intended, and the pros and cons of each and the easiest way to get started if you're just learning how to do this. If you like what I'm delivering, please consider subscribing to my channel, give me a thumbs up, and leave your feedback in the comments. I do read it, and I will respond back to you. So I appreciate your time and consideration there. All right, let's get into it. So, as a new trader, I've been trading myself. I'm not new. I've been trading for going on 17 years, been consistently profitable the past 5 years. And I've learned self-taught, and I've hit all of the pitfalls when it comes to trading. So I want to help you avoid some of those pitfalls and give you, my pros and cons on day trading or swing trading. So first, I want to define what day trading is. Day trading would be a short-term trade or multiple scalps on an instrument. And we are looking right now, this is the Apple chart, and this is the futures watch list. So I want to go to a screener and show you what I would look for in a day trade. And that means that we're going to take a short-term trade, we're going to round trip it in one day, meaning we open a trade and close it in the same day, or maybe we are scalping. Now, I usually find day trades by my preset stock screeners, and I am using TradingView as my charting platform. But I have a few parameters in order to find the day trades that are moving and are hot. I always look for a change in percentage, and it's got to have volume moving behind it. If it's not at least, in the millions of volume, I'm not looking at it. If it's, just a few 100,000, then I completely ignore it. But today we've got a lot of day trades to look at. And this one WeRide is sticking out to me because look at that gain in percentage, and the volume is really high. So there's got to be news behind these things that are moving for them to gap up significantly and move this much in the market. So let's take a look at this WeRide. This is interesting. And this would be something that would be considered for a day trade. Now, you look at the movement here, it gapped up significantly. It's up $15 per share, which is crazy. So there's got to be, some news there. But what I would do would be to, look at the daily time frame and then look at a smaller time frame to decide if I'm going to get in on this. Now, this thing is moved. It looks like it's doing its retracement, possibly round trip back down to the bottom. And if you don't know these things when you're day trading, you may say, "Oh, this thing's just going up forever. I'm going to hop in." Ignore my alerts there. There's my Bitcoin alerts. As a new person trading, you'd say, "Oh, wow, this thing's just going to go to the moon," right? Well, you don't know really where your entry level is, where your exit level should be. So that's one of the cons of day trading. Another con could be if this thing is moving really fast. I mean, and you can see on a 5-minute chart, this thing moved pretty significantly up. And it started, let's see, probably 4 a.m., I'm guessing, when news first came out. And it went from, let's just say, 17 bucks all the way up to $38. That is a huge move. And let's just say, you hit $25 and you're like, "Oh my gosh, I've made a ton of money. I want to get out." But the thing is moving so fast, or maybe it's before 7 a.m. where your broker won't let you trade. You can't get out of this stock and take profit. So if you don't have the right broker, you know what types of brokers to use, that also can be a con. The other side of this is if, let's just say, this thing ran up fast, and I'm just using this chart as an example, and then it started dumping, and it was before you could get out of the stock, and you lost all your money, or you made money and then all of a sudden you saw it vanish. That's another downside to day trading. Now, swing trading, let's just take a look at, I'm going to go to Apple because I think that's a good example for a swing trade. Yes, you're using larger cap stocks. Now, we've had a significant short-term move on Apple, but I want to look at a longer time frame. And this would be something, the longer time frames, you're going to stay in the trade longer. You're not going to take the trade in the same day and close it in the same day. You're going to hold it for several days, possibly months. That's a longer term investment. But you get into the trade, you set your take profit and your stop loss, and then you walk away. You're less likely to get stopped out or lose your money because you've got a wider range of take profit and stop loss. You can theoretically trade these brokers that are easier for a new trader to understand. So, for example, the first broker that comes to mind would be Robinhood. It's a fairly easy platform to use. You don't have to be super savvy on charts. You just maybe have to know a few basic rules when you're swing trading. And it's easier for you to get in and out of a position. So those would be benefits of swing trading. And you don't have to dedicate tons of time to it. You're not sitting in front of your screen all day long, worried about whether you're going to be able to get in or out of the stock before it, goes back down to its original starting price when you're day trading. So it sounds great as a day trader because you theoretically, if you know what you're doing, you can make a lot of money if you get lucky and you really know what you're doing. But if you're new to the game, I would say start with swing trading because you can keep your day job. You can use brokers that are easier to use, and you don't have to know as many of the technicals. You don't have a longer learning curve there. And you're not subject to another thing that most new traders don't know about until it's too late, the pattern day trading rule. And this states that if you don't have $25,000 in your account, you're not allowed to take more than, I think it's 3 trades in a 5-day period without being subject to the pattern day trading rule, meaning the broker has to, by law, restrict your account if you're trading more than that in that defined time period. So as a swing trader, you're not opening and closing a trade that very same day. You're opening it, and then a couple of days later, when it hits your target, the trade gets closed. And now for me, when I'm swing trading, I look for a few things. I look for the overall trend. And so to use Apple as an example, we are in an uptrend. I look for the price to be over the 200-day moving average, and this is my 200-day moving average indicator. I look for the price also to be over this 9-period moving average. So this is a 200, this is my 9. So the price has to be over that. I got to have a positive signal on my Lux Algo indicator. And then also, I've got to have strength. This is my relative strength index. So when it's moving up, that means the strength of the move is strong. When it is moving down, that means the strength of the move is falling. So if we're moving up and the strength indicator is moving up, that's a good sign that we're continuing to move up. Now, I also have these levels called pivot levels on here, and those are targets for me to decide when to get in and out of a trade. So if I were going to take a long on Apple, Now, this is not financial advice. This is for education purposes only. I would use my long tool. And let's say I decided I wanted to get in right here. I would set my stop loss beneath this candle, and then I would set my target at the next resistance level. That gives me a risk to reward ratio of 1.91. So meaning if the trade goes against me, um, I have lost a minimal amount. If the trade goes in my favor, the odds are stacked in my favor with my money management that I can, out of 10 trades, lose 3 or 4 and still continue to profit in my account. So that's how I would do this. So swing trading definitely, in my opinion, much easier to do, much less time consuming, much easier for a new trader to learn. And yeah, so always set your stop losses. And thank you guys so much for joining me. Remember to like and subscribe and leave me any feedback. And stay tuned for future videos where I can dig a little bit deeper into the basics of swing trading and day trading. And happy trading out there. Thanks so much. Take care, everybody.